This is Warren Buffett, $100 billion personal fortune. What's his number one rule for investing? Never lose money. What's his second rule? Never forget rule number one. If never losing money is so important, then this trader right here, who figured out a strategy with 100% win rate, would be the best strategy of all time, right? He actually pulled it off. Every single trade in his strategy was a winner over an entire year. That's the holy grail of investing, right? Not so fast. The real question is it actually profitable in the long run? And the reality is that just because a strategy never loses doesn't mean it's very profitable. Huh? How could that be? It turns out there's a hidden flaw that most traders overlook. And in this video today, we're going to expose it. Let's have a look.
In this video, I'm going to demonstrate three things. Firstly, I'm going to show you a trading strategy which has had 0 losing trades in 2024, and that's not just an enticing video title. Then I'm going to show you how to code or program this strategy so that you can backtest it in less than a minute using MultiCharts or TradeStation. And then finally, as a bonus, I'm going to show you a second strategy, which is, again, another highly accurate strategy, which you can trade alongside the first one. As I'm filming this video, it's early January 2025. Over the last couple of weeks, I've been going over my trading strategies to see which ones have worked the best and the worst throughout 2024. Now, one strategy really caught my eye because it had a 100% win rate in 2024. However, I wasn't overly surprised.
100% win rate. How is that actually possible? So I've got this whole thing mapped out and we're going to break it down for you and go through this step by step. This is the 100% win rate strategy. We'll cover the rules, the back test, and the performance. And yes, this strategy did have 0 losing trades in 2024. So how did that happen? What are the rules and conditions? Let's get into that now.
Because also back in 2020 and 2021, it also had 0 losing trades. In a minute, I'm going to show you exactly how to trade this strategy. But just before that, I want to talk about these highly accurate, or these strategies with very high win rates. Just because they have very high win rates or are highly accurate doesn't mean they make a ton of money. Unless, of course, you use a huge position size. I certainly don't recommend that. Now, there's 2 reasons they generally don't make a lot of money. Number one is...
The question is why? Okay, so the first lesson and the first takeaway here is just because you have a high win rate doesn't mean it makes good money. That's the problem with the 100% win rate. Do you want a 100% win rate or do you want to make money? Those are not the same thing. So that's the first thing to take note here. Now let's talk about why.
They don't go for large profits per trade. Normally, and in the case of this strategy, I use what's called a first profitable close, meaning that at the end of the session, if we see some profit, we exit the trade and run. So even if we see just a 5 pip profit by the end of the session, we're going to exit the trade. So that's going to give us a very small profit, but a winning trade nonetheless. It's not always 5 pips, it's whatever the profit may be at the close of the session. And the second reason these strategies generally don't make a lot of money is trade frequency. In 2024, this strategy I'm about to show you, on average, made a trade every 6 weeks. When it does make a trade...
Every 6 weeks. Okay, so that's the thing. If you're only placing a trade every 6 weeks and you're waiting for the conditions to perfectly align so that you only ever win, that's another way that you can have a 100% win rate. But how about all those 6 weeks when you're not trading and you're not actually making progress in your account? See, that's potentially a problem.
Trade, it's highly accurate and it's normally right, it's normally a winning trade. But these signals don't come along all that often, and that's why I wouldn't rely on this type of strategy alone. That's why I always trade these strategies in a portfolio or a collection of other strategies. If you combine 3, 4, 5, 6 of these types of strategies, suddenly you're trading much more frequently. And towards the end of the video, as I said, I am going to show you another strategy which is also highly accurate, one that you can trade alongside this one. Let's go and have a look at the rules for this strategy then, and then we'll move over and have a look at the performance report.
Okay, so we'll look at the rules. As I said, I got the whole thing mapped out for you. So the first thing is only long trades, and this will be with Forex, Euro, USD on the daily chart, but you can apply this to any time frame, okay? Because these are price action rules, so that means they apply to crypto, they apply to index, they apply to futures, they apply to stocks. Whatever you're trading, price action is price action.
So this strategy works on the daily chart of euro dollar, and it's a long only strategy. It's a strategy which I picked up from an old book written by Larry Williams many years ago. Now, the first condition, we want to see an outside bar, and that includes the highs and the lows. Some of you do ask me about the wicks or the highs and the lows, and yes, it does include those. We'll have a look at an example in a moment. The second condition, we want to see the close of today is less than yesterday's low. And then when we see that, we buy the next open. And moving on to the exits at the end of the session, or very near the end of the session. Session for Forex normally ends around 1700 Eastern Standard Time. So just before that, check to see we're in profit. If the profit is greater than zero, if we're showing some profit for the trade, then we exit the trade. If we're not in profit, we leave the trade open and then we check again 24 hours later. And then we have a stop loss of 200 pips.
Okay, so it's a very simple strategy. If the trade is in profit, you follow the rules, you enter according to the rules. And if the trade is in profit, then you exit. It's a pretty simple strategy, right? So we got only long trades. We're going to use outside bars. Now, if you don't know what outside bars is, let's see if we can find some on the E-mini right now, okay? You want an outside bar, which means it's a bar that's outside of the prior bar. And you see these pretty commonly, so it shouldn't be too hard to find. Let's see here. See if he pulls one up in the video.
Here's an example.
Okay, so just making sure that we're following the rules here. So we got the outside bar, high or low, and he'll give the explanation there that it must close. We're going to look for an outside bar. That's thing one. Thing two is we're going to want to see the close below the prior day's low. So that's rule number two. And then rule number three, we're going to buy at the next session's open. All right, so that's kind of what triggers. And then on the next day's open, we're going to get in there with a long position. And then as he mentioned, the exit rules, close the trade if in any profit, okay? So that's, again, what makes this, or part of what makes this such a high win rate, is because the second you get some profit, you basically close the trade, okay? So the upside is that your win rate is really high, but the downside is that you're only ever making a little teeny tiny amount of profits. And then of course, we've got a 200 pip or 200 point stop loss if you're trading futures, okay? So those are our rules. Now let's get into the back testing data so we can actually see how this works. And this is the first profitable close. So let's see him break it down for us.
On the chart. Now, what we want to look at is this outside bar here. You can see here an outside bar means that the high is higher than the previous bar's high, and the low is less than the previous bar's low.
Okay, so there's your outside bar. I was looking for an example, but here's a perfect one right here, okay? It's very simple. You know what outside means, right? Like inside, outside, right? Simple, nothing crazy here, okay? I'm inside right now. That's outside. Same thing, just on the charts, okay? So here is an inside bar. Here is an outside bar. What makes it an outside bar? Because it's above and below the prior bar. Simple, straightforward. A thing that you want to train your eyes to be able to see on every chart, because it's a common pattern and it also is very useful for determining what the buyers and sellers are thinking.
And we also need to see that the close is less than the low of the previous bar. And that's quite hard to see, isn't it? Because the close is here and the low is there.
Okay, so it's very close, right? You can see it's within a couple ticks, but it is technically below this wick, okay? So that meets the criteria, which is exactly what we're looking for.
Just below it. And then once we get those conditions, we buy on the open of the next session, which happens to be there by a little blue arrow. It's quite hard to see, but that's where we bought.
Okay, so what is happening here? Okay, can you see the big picture of what the context is? Context shows us that we are getting, look, the low is here, now it's here. Then the low is here, then the low is here. Okay, so we can see the lows are getting lower. We've got lower lows, right? We also can see that the high was here, then it was here. Then the high was here, now the high is here. So we've got lower lows and we've got lower highs, which means what? Bear trend. That means this baby's going down, but he's buying, okay? So essentially, we're going counter trend, okay? Because if the market's going down, then and then we're long, okay, we're going against the trend. So we're trading against the trend. And usually that's not a good idea. But in this case, we're going for such a tiny, tiny little profit target that it actually works out, okay? So context down, but then we're going counter trend for a tiny, tiny profit target, essentially getting in on a pullback when the bears who are holding their positions start to take some profits. That's when we get in long on those little retracements.
And then we're looking for an exit, the first close where we see some profit. So the close of this bar here was actually here. We can see that, and that would have been a negative trade. We wouldn't have been in profit, so we left the trade open. We went back, checked the close 24 hours later, and this is where the close was. So we can see that we've got a good profit 24 hours later, and that's our signal to get out of the trade. So we get out of the trade on the open of the next bar, and you can see by the little white arrow there, we've got out of the trade.
Okay, awesome. So let's make sure we're following along here with our back testing. We covered the basics of the strategy. Now we're into the back testing and the programming. And he's going to show us how he actually programs this into his trading strategy, which makes things a lot easier.
And that's a fairly decent profit for holding the trade just for 2 days. So a dead easy strategy to identify trades and really quite an easy one to place the trades.
Okay, so could you identify that, right? If you trained your eyes to be able to see outside bars and you waited for an inside bar and then an outside bar, could you train your eyes to be able to notice that outside bar and then to execute a strategy when you get a close below that inside bar? Yeah, of course you could. That's not very difficult, right?
If you're placing them manually, you just have to be around at the computer around the close of the session, which is about 1700 Eastern Standard Time. So that's the rules. Now let's move on to the programming and then the testing of this strategy. Here we are in MultiCharts. MultiCharts is the software which I use for development, strategy testing, and even automated trading. I've logged into my VPS, which I have MultiCharts running on. If you're looking for a decent VPS, then I'll leave the link in the description down below to the one which I recommend. You can see we're looking at a chart of euro-dollar, and I'm using TradeStation for the data source. It's a 1440 minute, which is a daily chart for euro-dollar. Now I'm going to open the code editor so we can program this strategy.
And again, these price action strategies will work on anything that you want to trade because price action is price action. So he's giving us an example with Forex, but you could apply this to futures or crypto or stocks, whatever you want to trade.
I'll show you how quickly I can program this. I'm not boasting because I'm not even a very good programmer. What I'm saying is it's very, very quickly to test your ideas with the likes of MultiCharts or TradeStation. TradeStation and MultiCharts use an extremely similar, nearly identical programming language. In fact, I wanted to show you how to program it because I was watching another popular video the other day where the guy actually used the same strategy and he was programming and testing the strategy using Python. Now, I can't comment too much because I've never used Python. I've certainly never programmed it. But from the looks of his video, he looked like he had pages and pages of code. I'd like to bet that he had well over 100 lines of code to test this strategy.
Wow.
And I'm going to show you how I'm going to test it with just 4 short lines of code. So let's go into the code editor and write this code. So this is where all the programming is done.
Okay, now if this looks intimidating, don't worry about it. I don't code and I know nothing about code, but he said he's gonna do this in 4 lines, okay? So let's actually look at this and see what it looks like to actually code in a trading strategy. And if you understand this, whether you're going to use automated trading or not, whether you're interested in setting up a trading bot or not, this is going to be valuable because in order to code a trading strategy, you have to be able to very, very clearly understand the rules of your strategy in perfect detail. So this is actually going to get you to think more clearly, and it's going to improve the quality of your thinking in terms of how well you understand your strategy, whether you're trying to code and program a trading strategy or not. So think of it as an exercise in better understanding your strategy.
And it's called the Power Language Editor within MultiCharts. And I've already named the new strategy. I've just got it here. I've just called it JG Demo Outside Bar 1. So let's begin. The first thing we need to do is write out those two entry conditions. So the first one is the outside bar. So we want to say if the current high is greater than the high 1 bar ago, and the current low
Torque, you're welcome.
is less than the low 1 bar ago. That's our outside bar. And the last condition, we want to see that the close is less than the low 1 bar ago. Okay, and that's our two conditions to enter the trade.
Do you understand your strategy well enough to be able to write it out like that? Do you see what I'm talking about, guys? Do you understand? Like this is such a great exercise in clarifying your thinking. And the thing with trading is clarity is power. The more clearly you understand the markets, the better quality trades you can take, and the more clearly you understand your strategy, the better you can execute your strategy, and the more clearly you understand yourself and your thoughts and emotions, the better you can manage those trades when you're taking them. You understand?
So when we see those two conditions, we want to buy next bar at market. Okay, that's it. That's our entry conditions sorted. Now we just need two more things. We need that exit, that bailout exit, or that first profitable close exit, and we also need the 200 pips stop loss. So let's write our exit. So we're going to say, oh, just one thing I'm going to note here is I did include 5 pips worth of trading costs in the report of this. So I'm going to change the first profitable close ever so slightly. I'll show you now. So we want to say if open position profit, now MultiCharts has a function which monitors the open profit at all times. So we're looking at the close of the bar. If open position profit is greater than 0, that means if we're showing any sort of profit, I'm actually going to change that. I'm going to change it to 50 because that's saying $50 or 5 pips. Because I've got that 5 pips of trading costs, it's going to cost us at least 5 pips just to get in and out. So I'm going to say, make sure that we're covering the costs and then we see at least a bit of profit. So if the profit's above 50, then we just want to get out of the market. So if the open position profit is greater than 50, then sell next bar at market. And that's it. We only need a stop loss now. Now I use set stop contract. You don't have to use this. I won't explain why now. What we need now is the set stop loss function, which is built into MultiCharts, set stop loss, and then we just need a value. We're going to use 200, and that is the equivalent of 200 pips for this particular instrument we're using. And that's it. That's our 4 lines of code.
Okay, cool. So 4 lines of code. He pulled it off in that quickly. It's pretty awesome. Okay, so 4 lines of code in MultiCharts or TradeStation, right? He's using TradeStation data inside of MultiCharts, if I'm not mistaken. 100% win rate, which we're going to see right now. Okay, so let's get ready for it. This is the moment you've all been waiting for. Let's see the 100% win rate.
We just need to hit the compile button or verify in TradeStation to make sure there's no errors in the code. And there is an error. And there's the error, which I left in on purpose, just to show you how this verification or compilation function works. And
okay, now just one note. If you're using this as an exercise in how to clarify your thinking so that you can better understand your strategy and better understand your trading, then what do you need to clarify in terms of your strategy? There's only 3 things, guys. 3 things, okay? If you think about this, it's kind of obvious, but it's worth mentioning. Your entry rule, your position, long or short, and your exit rule. That's it, okay? If you're trying to clarify your strategy, those are the 3 things that you need to make crystal clear. And if those aren't crystal clear for you, in fact, I would challenge you right now. Are those things crystal clear? Do you know in crystal clear painstaking detail exactly what your rules for entering are, exactly what your rules for whether or not to take a long or short position, and exactly what your rules are for exiting. If not, work on that, and I promise you, it will get you more of this.
Can any of you spot what's wrong? Well, I've missed out the then, okay? So I've got if the high is greater than the high previous bar, low less than the lower previous bar, and the close is less than the low by next bar. We need to say then, okay? So it's very quick to pick up any sort of mistakes. Hit the compile button, and we're going to compile successfully. Now that's ready to apply to a chart. So let's go and do that. We've got our chart. We're going to insert a study. We're looking at signals, find our outside bar signal, and that's ready to go. I'll just quickly look at the properties to show you that I've got $25 in and out, so it's a total of $50 for the costs. And we're testing with 100,000 units or one full lot. And you can see it applies to the chart straight away. Now let's go and have a look at the performance report. There's what the equity curve looks like.
It's a good equity curve, right? That's exactly what you want to see. It's just making money, making money, making money, making money, baby.
And that's just showing the 8 trades. That's just for 2024.
Okay, but let's look at the actual numbers.
You can see we're 100% profitable, made $3,800 trading that one lot. You can see the 8 trades, 100% profitable. An average trade, large average trade of 477. That's because we haven't had any losers.
Okay, so here's what I want to point out, okay? And I've pointed this out before. When you see the win rate, that is not enough information. That is not enough information. I want to say that again. When you see the win rate, it is not enough information, okay? What you need to take into consideration is your average win size and your average loss size, okay? So let's actually look at that now. These are the things you have to combine together to be able to effectively assess whether or not a trading strategy is viable, okay? So the first thing we have is 100% win rate. That's cool. But now let's look at the average trade win, okay? The average trade win is $477. Okay, we can see that right there. Average winning trade 477. Now let's look at the average losing trade, okay? We want to know what our average losing trade is, which is right below it. Now, it doesn't say, okay? So I wouldn't say that this data is sufficient to be able to actually assess the effectiveness of this trading strategy because it's never lost a trade. Now, that's good that it never lost a trade. But the fact is, we don't know what the average loss size is if it were to lose a trade. And we know that it would actually be the size of the stop loss. But you have to expect that at least at some point, there will be some losses.
So that was 2024 performance. But what about looking a bit further back? Let's go back and look at the past 15-year performance. So we're going to adjust the date range. And we're going to go from, let's go 1st of the 1st, 2010. Let that load the data. And let's check the performance report. And you can see we've got 127 trades now. Percent profitable over the past 15 years is still high at 86.
Okay, so all he did was zoom out and take in more data, right? We were just looking at 1 year, and now we're looking at more years of data, right? Lot more trades on this one. I think the last one was 7 or 8 trades. This is 127 trades. Okay, so just like I said, you're gonna start to see some losses, which is actually good because now we can see what those losses look like, and we can start to make some assessments whether or not we like this strategy. The win rate is 86%. The average winning trade looks like it's $486, okay? And then the average losing trade is $1,929, okay? So this is the major flaw with strategies like this, okay? This is the major flaw with strategies like this. When someone tells you their win rate is 86%, the first question you're going to ask them, okay? You're not going to be like the uneducated, idiotic brand new traders that don't know what they're doing, okay? And it's not their fault. It's not their fault, but they just don't know better. You're going to be smart and you're going to say, what's your average win size and what's your average loss, okay? average win and average loss size. I need to know that because an 86% win rate is insufficient information. Put that in the comments right now. Win rate is insufficient information, okay? If there's one thing you take from this video, let it be that. Win rate is insufficient information. Now, here's what I want to point out. 486 average winner, 1929 average loser. Would you be okay with that? Okay, would you be okay with that? Now listen, there's nothing wrong with the strategy. If it makes money, it makes money. But would you be comfortable with every time that you win a trade, you make $486, which is awesome. But then when you lose almost $2,000. To me, that sucks. I would not like to trade that, and that's not how I like to trade, okay? To me, that's absolutely awful, because what you start to see once we kind of scratch the surface here and get into this fatal flaw, which we're now exposing, showing it open to the light, is that the win rate is basically for your ego, okay? Because ultimately, the win rate doesn't have that much to do with your profit on its own, right? So you're going to take into consideration the average win and loss, and now we're going to have a more informed understanding that actually reflects this strategy's effectiveness.
6.6%. A decent size average trade, 163. Largest losing trade, you can see that's our stop loss value plus our trading costs, our slippage and commissions. Let's look at the equity curve. There's the close to close. So you can see that we have been making consistent profits over the last 15 years. Had a couple of larger losing trades here, bit of a nasty drawdown, but since then it's been pretty good.
And now that's awesome, right? But you need to ask yourself, would you be comfortable executing this strategy? Because the back test is like, if it's perfectly executed. Now, if you're going to automate this strategy, then fine. But if you're going to actually be manually executing this, you have to ask yourself how consistently you could execute this according to the way it's designed.
You already know that this is just a long only strategy. And you might say, well, yeah, okay, so it's a long only strategy. Perhaps the market has just gone up in this time. Well, I don't think it has, but I'll show you. We look at the buy and hold return. That's essentially looking at a price chart of euro dollar itself. So if anything, it's actually gone down, hasn't it? It's actually been in a downtrending market. So the long only strategy has been consistent over that time. Long only or short only strategies on Forex aren't my favourite, but I cannot deny that I first tested this strategy some years ago, and ever since then it has still been making money well into future markets or well into out of sample data. Just look at the annual period analysis. Let's look at the yearly returns. And we've already seen a 2024 with a 100% win rate, but we also had 100% winners in both 2020 and 2021, and even 2015, going back a little bit further.
Okay, so as high as 100%, which is awesome, but as low as 62%. So you can see that the market conditions, and a lot happened in these few years here, but you can see the market conditions have a lot to do with that win rate.
We have had some losing years. We saw that on the equity chart. And that's pretty much typical for most strategies. Most strategies, you're not going to get winning years every single year.
Obviously, that's what I'm saying.
For 15 years straight. As I already said, even though this strategy does have that crazy high win rate, or that highly accurate, it doesn't make a load of money with its low frequency of trades and its low profit per trade. But it's a really nice strategy to have in a portfolio. In 2024, this strategy actually only made a net profit of 1.9R, but luckily I did have some much better performing strategies throughout 2024 to trade alongside. Now, if you're interested, I'm actually planning to do a live presentation showcasing a lot of these 2024 strategies. I want to do it live so that we can interact. You can ask questions and I can dive into strategies which have been working best over the most recent year. If you'd like to get on the live webinar with me and find out about some decent working, let's go and have a look at another high win rate strategy, which complements the outside bar one.
Okay, cool. So we did the outside bar strategy, right? We covered that. You saw his 15-year back test. It was not a 6% win rate. It was an 86% win rate, okay? So, you know, it varied, right? But there were a number of years there that were 100% win rate, which is pretty impressive. So that's pretty interesting. However, you know what you need to look for now, which is your average win and loss size. Now let's get to the second strategy, which he's saying is a complementary high win rate strategy. So let's get into that now, starting with the GBP USD, okay, on the daily chart.
Okay, let's have a look at the second strategy. And it's this one here in the lower pane. This one, again, is a 1440 minute or a daily chart. This time
so down
it's
here,
using pound dollar. And I just want you to look at the trades or where the trades occur on the chart, because I think you find these strategies can be quite complementary. If we look here, first trade was here, 17th of Jan. We didn't have a trade here until a little bit later. We got no trades here on the outside bar strategy, but we did open one here. We've opened a trade here, and we didn't have one here. We opened one here. We were in a trade here. We had a big long period here where we didn't open a trade, but we did open a trade here. So I think you get the idea. They can be quite complementary even though they don't trade that often. Let's just have a look at the performance report. There's the equity curve. You can see it's pretty good up until the last couple of trades, which were losers.
Okay, and that's actually a perfect example of why high win rates have a major flaw. This is a visual example. You've got all of these wins, but then remember, like I said, the losses can be lethal because they're so much bigger than the wins. So notice it was looking great when it was winning, but as soon as it started to losing, look at, you lost almost it looks like you lost more than half of your profits. It looks like we lost more than half of our profits in just a couple of trades there, which is not good. I mean, if you're executing this manually, like if you're trading and you make all this money and then you lose half of what you made over all those trades, that's lethal.
This is just 2024 only. Took 9 trades, almost 78% winners. Average trade of $204.
Okay, but why isn't he mentioning the most important thing here, guys? Look, the average winning trade is $1,100 and the average losing trade is $3,250. That is absolutely brutal.
So for those of you who are interested, actually, this works on the basis of looking at an indicator, Williams percentile, and combine that with trading only a certain time of the month using trading day of the month. In fact, let me just put the indicator on so we can see. Williams percent R, length of 14, and we're looking at the oversold level of 20. So you can see that when the Williams percent R drops into the oversold level, this is when we're initiating trades along with the correct time of the month. Okay, so we don't initiate every single trade. Like here, we've dropped into oversold, it's below 20, but it was obviously the wrong trading day of the month or the wrong period throughout the month. Nonetheless, I just wanted to demonstrate that even though we've got 2 strategies that don't trade very often at all, but they can be quite complementary, one can open a trade when the other is flat and vice versa. So that's about all I wanted to share with you in this video.
Okay, so you've got the strategies mapped out, right? He did the second strategy, which showed you on the pound versus dollar on the daily chart. He's using his indicator, only trading specific days of the month. It's very selective. You guys notice that it's very selective. Why? Because there's a relationship between quantity and quality. So he's just sitting on his hands essentially for a long time, only waiting for those perfect conditions to align. And the thing I don't like about that is that what are you doing to the money in your account when that's happening? It's not growing, which I don't like. So there's pros and cons here. There's things that are good and bad about this strategy, but the good thing is that it wins a lot of the time. The bad thing is it doesn't take very many trades, and those are times when you could be growing your account. However, every strategy has pros and cons, and you saw the results. Were decent, okay? I mean, they're good. They're good. This strategy makes money, okay? It's just whether or not you'd be comfortable trading it, okay? So the key takeaways, when you have a high win rate strategy, it doesn't always mean high profits. Do you understand that? That's one thing that I want every single person that watches this video to take away. A high win rate doesn't really mean high profits, right? So this is why the Warren Buffett strategy, it doesn't really apply to traders. What we're doing is very different. So low frequency trading, where you're taking fewer trades, means that you're taking less risks, but also it means that your losses are going to be very outsized compared to your winners. Okay, so that's a major flaw in my opinion. However, it is a make money strategy, and it is making money, right? So there's just pros and cons here. The trading strategy in his portfolio is one. It's one of many trading strategies, okay? So he's saying for best results, combine these strategies together, which makes sense to me. And simple strategies can work for decades, and it's true. You know, these price action strategies work over and over again once you refine them. However, as you saw, the win rate and the results of the strategy will vary highly based on the market conditions, which is why you need to actually be able to assess market conditions so that you can make those adjustments, because that can be the difference between huge drops in your performance or not, right? If you know how to read the market conditions and you can see them changing, you can adjust your strategy, and that's the best case scenario. Now, here's your Trades by Bren action challenge, because you know I'm here to get you to take something you learn from this video so that you can get 10 times the value by applying what you learn. So here's my action challenge for you. Test a simple strategy. Choose one price action strategy, whether it's outside bars, pin bars, whatever, okay? Pick the strategy you like, your favorite. Then backtest it for 12 months and share your results, okay? Now, this exercise of backtesting is something that will help your trading, because it'll help you see over time how the performance of that strategy pans out. Next, optimize your trading portfolio. And instead of relying on one strategy, see what happens with the possibility, okay? I'm going to say try on the possibility, okay, of combining two or more strategies to increase your trade frequency, okay? If you're interested in this type of low frequency, only taking high quality setups strategy, that's something that you want to consider the possibility of, okay? Now, some common mistakes to avoid. One, overcomplicating strategies. You don't want too many indicators. That's something you always want to watch for. Simple usually works better. The second mistake you want to avoid is relying on a single strategy. The third mistake you want to avoid is ignoring market context. By that, we mean market conditions. I just explained that. And the next is skipping backtesting. That is a major mistake. And if you're having trouble having confidence in your setups and your trading strategy, backtesting could be the thing that you're missing. All right. So that's the 100% win rate strategy. If you're interested in my strategy, go to tradesbybren.com and I will share with you my 3 favorite trades, including the 3 patterns that I look for, how I set my stop loss so I limit my risk, and how I set my profit targets so I can get out before it's too late. Tradesbybren.com is where to get that. And I will give you that free downloadable PDF. Hit the like button if you like this video, and hit that subscribe button if you want to see more from me, and I'll see you in the next one. Thanks so much for watching. Thanks for watching.